All right, welcome everybody to the Texas REIAs. And I'm Phil Grove. I'm the co-founder of Texas REIAs, the largest real estate investor network in the state of Texas. It's actually a series of real estate investor associations across Texas: Austin, Dallas, Houston, San Antonio. At this point, we're close to 100,000 members. And we're going to go through a lot of presentations tonight, including a market update to kind of bring everybody up to speed on what's going on in the market. And this is kind of a summary, so I'm actually going to jump over to this slide, which I think maybe is easier to read, of kind of what's going on in Texas, and then we'll talk about kind of what's going on in some of the individual cities. Oops, I need to put the right slide up. There we go. So what's going on in Texas? Well, the first thing you're going to notice is that sales are up a little bit, interestingly enough. The average sales price, people like the market's down. Actually, the average sales price year over year is up 1.6%. So yeah, the market has certainly settled and it's not overheated like it was for the last several years. But it's not really going down, it's not really going up, it's kind of going sideways. Now the median price is down a little bit. What is that? 1.4%. So almost no difference at all between the average and the median average sales price. You know, what's really happening is like we have inflation, right? And what does inflation do to real estate prices? What does it do? Does it make them go up or make them go down? What do you think? Go up, go down? It does both. You're right. It does both, right? So for example, what's going on? It's a little more expensive to buy houses. Interest rates are up compared to the last several years. And as a result, they're a little less affordable, or maybe for some people a lot less affordable. So there's less buyers. And I'm going to tell you, real estate, you got to understand, it doesn't really care much about the economy, interestingly enough. It doesn't even care that much about interest rate. What real estate cares about is supply and demand. That's all it is, pure economic supply and demand. So for example, during the Great Depression, real estate prices went down a whopping 6%. Nothing. Right? During the Great Pandemic, we just went through the Great Pandemic, another one in a 100-year event, real estate prices went up 30%. Well, obviously it wasn't the economy that made the real estate prices go up or down. It was supply and demand. Right? So right now, we have inflation. Inflation's caused interest rates to go up. Right? With interest rates going up, loans are less affordable. So properties are less affordable for the payments, and that's reduced the number of buyers. So the demand's gone down. But the other side of the coin is the supply has gone down. And the reason the supply has gone down is because there's all these people who have been buying houses for the last several years with 3 or 4 or 5% mortgages, and they don't want to let go. They're like, man, if I sell my house and buy a new house, I'm going to get like a 7.5% mortgage, and I'm going to lose my 3% or 3.5% mortgage. So the sellers aren't selling. And if you look at resale properties are in the tank. There's just the inventories. There's just nobody reselling their house. I mean, some people are, but the number of resale properties is way down. Now, what's filling the gap? New construction is filling the gap. So new construction sales are way up while resale properties are way down, and it has to do with what happened with interest rate. Now, interestingly enough, right, builders are not able to get more money to continue to build. Right? So construction is slowing down, which curtails the supply, which will create a housing shortage. Why? Because people are still moving to Texas and still having babies. Okay? So you put all that in the blender and what's happening, and the answer is not a whole lot. And what do we think is going to happen next? Well, nobody knows what's going to happen next, but there's no major things that are driving the market to go dramatically higher, dramatically lower. The market's kind of being driven like that. Right? In 2008, it was a completely different situation. Up until 2008, we had subprime lending. Right? If you wanted to get a loan, you walked into a bank and you said, I want a loan. A banker would walk up, they'd hold a mirror under your nose. If they saw fog, you got a loan. That was the loan application they used back in 2007. And then in 2008, all the banks went bankrupt. You know, the government actually changed the definition of bankruptcy in 2008. Remember that? mark to market, that whole thing. They all went bankrupt. They just called it something different. They got bailed out, and eventually they got back into the lending business. But what happened in 2008 is lending stopped. It didn't slow down, it hit a wall, it just stopped, okay? And so all of a sudden, you couldn't buy a house because you couldn't get a loan because the banks were all like, oh, we're not loaning anything, we're bankrupt, we don't have any more money or whatever, right? And we had this huge glut of supply, free money, building houses by the gazillions, and then the demand just stopped like that because of that very unique situation with the subprime lending crashing, and then of course real estate crashed after that. So that's what happened in 2008. This is a completely different market. There's not even anything resembling. We haven't had easy to get money, although it's been cheap money, but because it wasn't super easy, we don't have a huge surplus of supply, although we have decent supply. This is what's happening to prices, and consequently you boil it all together and real estate is kind of flat. Not dramatically different, down a little bit. Days on market. Days on market is the average number of days it takes to sell a house that sold took to sell. And it's up a little bit, 47 versus 25. But I think the more interesting and important data is this point here, inventory, months of inventory. Months of inventory means if you stopped putting any more houses for sale, the only houses we're ever going to sell are the houses that are for sale right now, how many months before we're out? And the answer is 3.3 months. Okay, so what does that mean? It means that means on average it takes 3.3 months to sell a house. That's what it means. Now, here's the thing. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. We still have a very strong seller's market when you measure it by inventory. Now, different properties in different locations at different price points, inventory is very local. It's like almost street by street, but on a statewide basis, it's like 3 months of inventory. That's nothing. That's really not much inventory. Pending sales, what is it? It's a little different. What is that? It's down a little, not much. Total active, when inventory goes up, the number of actives goes up as well. So, when you look back at the last few years, in 2021, right, prices went up 18%. 2022, prices went up another 10%. And now, depending on which average you look at, prices are down 1%. So we had a great ride, and now it's kind of settling out, and that's kind of where we are right now. Okay, so what's going to happen going forward? I don't think a whole lot. Again, there's forces pushing up and there's forces pushing down. Nobody can tell the future, and I'm not going to try to tell you that I can tell the future. But I will say real estate is, I would argue, easier to predict than other things. Like the stock market, who knows? It could go down 10,000 points tomorrow. It could go up 10. Who knows? The economy, who knows? Real estate, not as hard. And the reason it's not as hard is because it's supply and demand. We actually know exactly how many people are having babies. We know how many people are moving to Texas. We know how many people need a house to live in. We know that. We even know how many houses we're building. So we know exactly what the supply is and exactly what the demand is. And you can actually forecast that out several months with great accuracy because it doesn't change suddenly. So based on that forecast, we don't really expect anything dramatically to happen. Now, nuclear bomb from North Korea, hits, that could change the situation quickly. Diving into the different cities, Dallas, what's going on in Dallas? Average sales price, $518,000, up 1%. Median price, $415,000, down 1%. Dallas is in many ways, for a lot of different interesting reasons, kind of the bellwether of Texas. Dallas tends to be the first place where things change, and for whatever reason, it's always been that way. Days on market, very similar to the statewide numbers. Up a little bit, but months of inventory. Look, this is hot. 2.6 months of inventory. in Dallas. That's actually hotter than the state of Texas. That's actually crazy strong market by inventory standards. Total active listings is up a little bit, but not much, right? 1%, and the same numbers as before, right? 2021 up 20%, 2022 up another 15%. This year kind of leveled off and down maybe 1%. Now, for some people, it feels a little different, right? A couple of years ago, you put a house on the market, you have multiple offers, and they would end up selling for above even the list price. Now they're selling just below the list price. Takes a little longer, and it's just a perspective. Somebody said earlier, interest rates are high. And I said, what do you mean interest rates are high? Interest rates are normal. Because when I started investing in real estate, right, interest rates were 7.5%, and that's what they are again. So we're back to normal, right? It's like, but if you were just investing for the last few years, interest rates are high compared to just a few years ago. So depending on kind of how long you've been looking at this, you're going to have a different perspective. San Antonio, the most affordable city of the big cities in Texas, average price $387, flat. Median price down a little bit, $329, down 2%. Days on market's gone up a little bit, 57 days. Months of inventory a little higher, 3.8, but it's still technically a seller's market. Pending sales is down about 18%. Active listings with the inventory is up a little bit. San Antonio did not get the biggest run up as some of the other cities did. But it is, like I said, a lot of Texas investors like to get started in San Antonio because it's just a more affordable, cheaper rentals, a little bit of better cash flow per dollar rental owned, and cheaper to do fixes and flips. Austin, the average sales price in Austin is, what is that? $593,000. Is that what that says? Holy cow! Yeah, that's not a typo, folks. Yeah, we were doing a little research on where the name Austin came from. Turns out that Austin is actually Latin for San Francisco. Yeah. So Austin has turned into the San Francisco of Texas, driven by high tech, and it's had quite a ride. Look at this. In 2021, prices of rental properties in Austin went up, you got it, almost 30% in 1 year. Next year they went up another 10%, and this year they're down 10%. So what's interesting, bigger run up, bigger run down, right? That's what happened in Austin. But in terms of it leveling it out over the same last 3 years, it's about the same as Dallas. Just went up a little higher and came down a little faster. This market has had the biggest growth in inventory, 3.7 months of inventory, but still a pretty decent market. Pending sales are up a little bit. That's actually a little bit of a surprise. That was different last month. Active listings is actually up, and that's what you would expect when the inventory goes up. The active listings go up. Houston, just to round it out, average sales price $428, up 0.5%. Median price down 2.5%. Days on market a little higher. Months of inventory 3.2. Pending sales up a little, active listings up a little. So that is what's going on in the Texas marketplace in all the major cities.